And we are live from Bloomberg's world headquarters in New York. I'm Sonali Basak.
And I'm Tim Stedevec. Welcome to Bloomberg Crypto. It's a look at the people, transactions, and technology shaping the world of decentralized finance.
And it's a landmark moment for crypto as President Trump signed stablecoin legislation into law after a long push by the industry to go mainstream.
Congress already looking at the next big crypto legislation as Senate Republicans today released their draft response to the digital asset market structure bill.
And with all the positivity around crypto, companies are making moves in public markets. One of those is Bitcoin Standard Treasury Company. We're going to be speaking with the CIO, Sean Bill.
All ahead on Bloomberg Crypto over the next half hour. We've got a packed show, but first let's check out the market right now because we're still seeing momentum from last week from that sweeping U.S. legislative push to regulate the sector. Bitcoin up about 1.7% right now. It's hovering around those all-time highs that were reached last week. The number to watch for, about $120,000 per Bitcoin. Ether right now down about 1%, but it's been on a tear this month, up close to 50% just in July. Still though, off of those all-time highs of around $4,800 back in 2021, 3718 is the number we see right now. Check out Bitmine Immersion Technologies, ticker BMNR, 3.5% to the upside, rising after Cathie Wood's ARK Invest bought $182 million of this company. It's an Ether Treasury company. They bought across multiple of its funds. That's about $4.77 million shares, excuse me. Check out what's happening with Circle, down about 15% just since last Thursday, downgraded today to sell from neutral at Compass Point. Compass Point sees more competition now that the U.S. stablecoin bill has passed. Analysts said that margin and market share expectations may have to be recalibrated due to that competition, Sonali.
Everybody wants a stablecoin. Everybody wants a Bitcoin treasury company too. You look at Michael Saylor's strategy buying more Bitcoin last week, nearly $740 million worth, and it's a staggering statistics you have now. You have Strategy owning 3% of all Bitcoin, and they're not the only ones buying up Bitcoin. Trump Media bought $2 billion as part of a plan to become a treasury company, and it's the same company that owns Truth Social. They soared off of the news. That is the ticker DJT. And Tim, we will be speaking to another company that's getting into the space a little bit later. A lot of companies entering that world.
Yeah, no shortage of anything to talk about throughout the program today. Well, the Trump administration, speaking of that, has been advocating for the stablecoin bill all year. Officials appearing on Bloomberg throughout the process. It culminated in a signing ceremony at the White House on Friday.
This afternoon, we take a giant step to cement American dominance of global finance and crypto technology as we sign the landmark Genius Act into law. You've made our dollar look really good and strong and powerful. It's good for the dollar and it's good for the country.
And I think this would increase confidence in the industry. And I think that you would also see banks getting into the act. I think you'd see traditional financial players getting involved in it. And that's why the float is expected to grow from, call it, roughly $250 billion to trillions of dollars.
I think could create at least $2 trillion in demand for Treasury bills.
So these are not securities, and it's the banking regulators who are going to be looking after them. And I think that's appropriate because of the role that stable coins play, and I think will play in the future.
Under the Biden regime, it was really mostly just policy through prosecution. These folks were victims of overregulation. When we started, devising a plan of how we would solve this problem, we kind of looked at it in three phases. We said we're going to have a demolition phase, getting rid of the overregulation. Then we're going to have a construction phase, which is underway, and obviously we have one building that's been constructed here with stablecoin legislation, but we're heavily reliant on our colleagues up on the Hill to get this done. And then we have the implementation phase.
And now to the next step with legislation. Senate Republicans releasing today an initial discussion draft of the digital asset market structure legislation, building on the Clarity Act passed by the House last week. Let's bring in Nathan Dean from Bloomberg Intelligence. The Clarity Act is really the next step, isn't it? When it comes to crypto market structure, we're talking about now jurisdiction, who is going to be overseeing many of the most controversial parts of the crypto industry. How is this playing out?
Yeah, so this came from the Senate Banking Committee, and this is a discussion draft, which means more changes are coming, especially as the Senate Agricultural Committee gets their hands on this. Because remember, the Senate Banking Committee only has authority over securities. The Senate Ag Committee has authority over commodities. That's important because a lot of people in the crypto world want to know, is this a security or is this a commodity? Now, the draft that came out today created a new class called an ancillary asset, and that essentially allows crypto companies and owners and issuers to go self-certify and say, look, we're not a security, therefore we don't have to follow securities rules. But this bill also does have a significant amount of disclosures and also Bank Secrecy Act and also anti-money laundering procedures that would also try and make sure that compliance requirements are certainly key for these companies that decide to move forward.
Nathan, a piece of crypto legislation signed by the president on Friday. We just told you about that. As far as the timeline looks on this specific piece of legislation, what are you telling clients right now?
Yeah, look, it's not great to issue a discussion draft the week before you go home for the August recess, but that's essentially what it is. It's just a draft. And the Senate Banking Committee also put out a request for information at the same time, and so I'm sure a lot of the crypto folks are going to spend August recess responding to that. Now, come September, there's going to be a government funding fight, so you'll see some work done at the committee level, but I don't think you're going to see anybody really try and push this move forward until later in the year. We're telling clients that we don't think any of this can really come together until the first half of next year.
Nathan, really quickly here, do you think that it really makes sense for the CFTC to be taking on this much more of a role when it comes to crypto, or do you think that this is a product of how the SEC had been under Gary Gensler and the frustrations that the crypto community had with the SEC's what they call enforcement by regulation by enforcement?
Yeah, so the CFTC doesn't have authority over spot markets. So right now, if you're a commodity like Bitcoin, CFTC only has authority over fraud prevention. And a lot of the people in the crypto sector want to go to the CFTC because they have what's called principles-based regulation. It's a little bit easier and less onerous, in our opinion, than if you were with the SEC. So a lot of this still has to be played out. But I think at the end of the day, you are going to get a bill that defines what is a security and what is a commodity. And I think most of the crypto world will go to the commodity under the CFTC's jurisdiction.
Nathan Dean of Bloomberg Intelligence joining us from our Washington and D.C. bureau. Thanks, Nathan.
And we are joined now by Jelena Djuric. She is the co-founder and CEO of Noble, a stablecoin infrastructure company that has facilitated $18 billion in transaction volumes. And that's just the beginning. Jelena, when you think about the way that crypto is now able to evolve in the U.S., how do you think companies are going to flock to this? We have seen retailers rumored to be starting their own. We have seen many banks in conversations to either start their own or band together and figure out how to figure this out. What I hear from bankers over and over is, why do they need this to have as a payment rail? How do you feel?
So I think it's important to clearly state this is a once-in-a-generational opportunity to transform payments. I think when you're looking at the retail side, for the companies that own the distribution, when they own the customer relationship, if you can save on things like interchange fees, if you can save on things like payment processing fees, you're going to take a look at it. I think on the other side, obviously the banks, the credit card companies, they're looking at it as well. Today, even the Western Union CEO, he's on TV talking about the opportunity for stablecoins to save fees on things like remittances. So I think on both sides, whether that's legacy banking or the retailers, you're going to see incredible demand, and it's a once-in-a-generational opportunity to transform payments.
A once-in-a-generation opportunity to transform payments in your view, but who are the losers here? Who are the ones who miss out because of this technology, because of this legislation?
I think it's actually the tech providers that aren't ready to service all of this demand. Basically, if you look at Noble, we've been building this infrastructure for over 3 years. If you look at Circle, the reason that they are, as famous as they are is because they've been building this technology for 10 years. So basically, I think the ones that, are getting left behind will be the tech providers that maybe didn't get smart on stablecoins when they should.
Who are they? Are they like the credit card companies that don't have this technology set up yet? Give us some names.
Yeah, basically credit card companies that maybe didn't invest as much into their crypto teams as they should have. Not necessarily going to name names. I'm not in the weeds of these organizations, but basically any institution, any incumbent that didn't take this seriously when they should have. And I would say that the time was probably at least 5 years ago.
Why is it something they should take take seriously. While you can understand that the interchange fees are something that big retailers don't want to continue to be beholden to, what is the evidence that this has made it cheaper at scale? We hear a lot of examples about people using this in places where it's not as easy to transact via dollars, right? But the banking system is already online in the United States.
Sure. I mean, globally, right? If you're looking at cross-border banking transactions, I mean, you have, multiple intermediaries that are taking their cut. So obviously, when it reaches the end consumer, you're looking at, a ton of fees that people would rather not pay. To your earlier point around scale, again, this is proven technology. So the time to get smart was at least 5 years ago by these incumbents, in my opinion, basically understanding, transaction fees, natively on chain, less than a cent. On Noble today, it's like a fraction of a cent. And so being able to kind of scale these systems, it's possible, but basically you need these incumbents to actually take the time to transform their internal processes.
Okay, so let's say the incumbents do this, and we do see a revolution when it comes to stablecoins. What does it mean for an everyday consumer who uses a payment product to actually buy something?
Yeah, I think to Shonali's point, we are already familiar with online banking or Venmo or Zella, or digital wallets, right? Before COVID times, digital wallets weren't a standard part of our user experience. They now are. So basically, it should look like your existing experiences with a fintech application, a payments application, basically, if this is successful. Because I think people don't want to understand the complexities of crypto.
Well, somebody listening now might say, well, I'm not convinced on the use case if I can do all this stuff already.
That's why the adoption will come from the companies that can save the money, right? Whether that's a retailer, whether that's a remittances company, whether that's a bank. So basically, it'll be top down, and the adoption will, result that way.
So why is this something that people feel so secure will be good for the U.S. financial system? Because right now, the majority of stablecoins are tied, yes, to the U.S. dollar. Yeah. But it doesn't need to be that way, does it? You could see a scenario where you see stablecoins that are tied to other currencies or commodities. Yeah. And what are the chances over the next several decades, a couple decades, that those could become more popular?
99% of the current stablecoin volume is US dollar denominated, right? We have the euro, we have other currencies, but they're not taking off. Part of that is regulatory, right? So you have jurisdictions like the European Union, Japan, Korea, that I think are still have a long ways to go to catch up with what the US just did with the passing of Genius. I think it's important to overstate that Genius is the most important piece of U.S. crypto legislation since 10 years ago when we had the New York BIT license. So it's regulatory and it's actually willpower. And I mean, we've seen the willpower with the president and his team, and you're going to need that replicated in other jurisdictions.
Does a normal everyday customer of a store in the United States need to understand the plumbing here?
Absolutely not. They should just need to know that things can be more cost effective. Can bake in rewards. Basically, they should have as easy of an experience to tap to pay, to transact as they normally would in a way that's digitally native, and it happens to have crypto under the hood.
Jelena Djuric, co-founder and CEO of Noble, joining us here in New York on set. Well, coming up, a bunch of crypto-related companies have made moves in the public markets over the past week or so. We're going to take a closer look as they ride this wave of optimism. We'll be talking with an executive from one of those companies, Sean Bill, with a Bitcoin standard Treasury company. He's going to join us in just a few minutes. And to access all the latest data and news on crypto, check out CRYP Go on the terminal. This is Bloomberg.
Now, the renewed optimism in crypto is leading to a new wave of potential public market offerings. In recent days, we've heard of a number from the likes of Cantor Fitzgerald, BitGo, and Peter Thiel. Cantor working with many of those potential hopefuls. More on this. We're going to bring in Anthony Hughes with Bloomberg News. Bullish being one of them, BitGo being another one.
Bullish, not to be confused with your show.
Bloomberg original show, correct.
I saw that news cross the Bloomberg terminal, this redhead on Friday night, and I was like, hey, Shonali, you were early to this.
Perfect timing,
okay,
right?
That's it. New episode tonight, right? New episode tonight?
Season finale.
Okay, all right. Just throwing it out there.
Thanks for that promo.
Yeah, no problem.
Anyways, bullish among the potential hopefuls. How are investors reacting to these? Because some of these are fully formed companies. Some of these are brand new companies that are coming to market just hoping to buy a bunch of Bitcoin.
Yeah, so this year we've seen Circle go public in June, so that's probably been the real concrete example of a crypto company going public. But obviously in previous years, Coinbase went public via a direct listing. But there is a long list of these companies that could go public. But when companies file, it doesn't necessarily mean the IPO is definitely going to go ahead. But there's definitely a flurry of activity and a lot of people lining up for obviously what's a moment in time, which is very interesting for the crypto sector.
A moment in time. I'm not asking you to make a judgment here, but the term irrational exuberance comes to mind when I look at all these headlines. Froth is another word that I've heard critics push back with. What are analysts saying to you? What are observers saying to you? Too much, too fast?
Yes, I think definitely people are concerned that this is going to evolve into something like that situation. The question is it already happened or is it happening? It's probably fair to argue that it's still to play out somewhat. And I guess you guys have plenty of experience in these situations where maybe if there is, I hate to use obviously the word bubble is what people would love to use, and it's a fair word. Maybe it could be, but maybe that's still it could be something that goes for a while.
Let's take the flip side of this argument too, because yes, we've seen enormous surges, for example, with Circle since the IPO. But wouldn't that suggest that maybe there was a lot of pent-up demand? These companies have waited for their entire corporate lifetime to go public. They couldn't really do it easily last year or the year before.
Yeah, I think that was extraordinary with Circle that the valuation went up in such a material way in a fairly short space of time. But a lot of these companies have been around. I mean, we've been talking about crypto for a fair while. So I think we're just starting to see the real, I don't know if the word's fair, an assault by the crypto sector on public markets. And, obviously, with legislation going through Congress and in Washington and the like, that the industry is finding some validation, and I think they will certainly be trying to find a lot of extra validation through public markets, because these companies are broadening their investor bases. And even you saw yesterday, MicroStrategy did another preferred equity offering, which is sort of an IPO of a specific structured product, but that sort of for them, it's an opportunity to bring in different types of investors and widen the club, I guess.
Yeah. Well, the club keeps widening. Anthony Hughes of Bloomberg News, we thank you for keeping an eye on this for us. Coming up next, we're going to be talking to one of the companies that are looking to public markets. That is Sean Bill of the Bitcoin Standard Treasury Company, joining us next. Stick with us. This is Bloomberg.
Well, we were just talking about companies making moves in the public market. Bitcoin Standard Treasury Company is one of them. It plans to do this as part of a deal with Cantor Fitzgerald. It would make it the fourth largest public Bitcoin treasury. For more, we're joined by Sean Bill, Chief Investment Officer of the company. Sean, Shonali and I were just talking about this a little bit before the program, and the idea of the utility of Bitcoin. It seems now that Bitcoin is only a bet that it will continue to increase in value. The utility of it isn't necessarily there with all of these companies becoming Bitcoin treasury companies. What view do you have?
Well, I think there's a lot of different use cases for Bitcoin. I think you can pursue yield strategies through creating Bitcoin revolvers, which face counterparties like the ETPs in the marketplace, like BlackRock and others. You can use it as collateral for insurance. So we think that's another really interesting avenue that you can pursue. So I think that the market is really kind of updating and changing and becoming a little more evolved in how Bitcoin will be used as collateral. We think that Bitcoin is the most pristine collateral that you can use.
Sean, what kind of insurance? I'm sorry, it's not like you can go to a traditional way insurance company and say, hey, AIG, I've got a bunch of Bitcoin. I don't believe.
No, you can go to the Caribbean insurance market, and you can actually use Bitcoin as collateral to underwrite insurance policies. So we think that this is a huge market that can be opened up, and that's an area that we're exploring.
Do you think that Bitcoin should be looked at by traditional banks when it comes to assets that a person has when they're being approved for a mortgage?
Well, that's already, I think that's already happening in finance companies. If you look at some of the mortgage products that are out there, you can pledge Bitcoin against a mortgage, get cash up front for that, and then use the house and the Bitcoin as collateral. So you're at like a 50% LTV. So I think the banks are playing catch up there.
What about Bitcoin being used as a means of transaction? being used to pay somebody for something and not necessarily using it for dollars? Because that was the promise of Bitcoin years ago.
Yeah, I think for large payments, that's what you see with Bitcoin. When you have large payments, they go through the main chain. When you have smaller payments, people usually default to Lightning Network. And I think really the Lightning Network is incredible in terms of the speed and efficiency of transacting, and really unlimited in terms of the size. I think, we'll see how things work out with all the stable coins, but that's another really interesting area for payments. I think, we'll see what develops there over time.
Sean, I understand that this would be the 4th largest public Bitcoin treasury company. And of course, some of the ones that have been out there, you think Strategy, of course, has been kind of the kingmaker in this space for so long. Why does the world need that many Bitcoin treasury companies? And isn't it stiff competition when there are other ones out there that are so big? Why would an investor interest go to the ones that have been more able to tap capital markets with history?
Yeah, I would agree with that. I mean, I think that there are going to be just a couple winners here. I think that BSTR will be one of the winners. We're showing up with a bulldozer and a permit to clear cut Bitcoin. We're going to, open up in the 4th spot, and we think that we'll very quickly slingshot into number 2. That's our mission. We're really trying to create a fortress-like environment for our Bitcoin, and really trying to position ourselves as the Berkshire Hathaway of the Bitcoin ecosystem.
What do you mean by that? Like, do you mean by going and then buying other companies that are in the space and running them yourself the way that Warren Buffett and Berkshire Hathaway has done?
Yeah, I think there's a great arbitrage here. We can issue debt at 1%. We can buy Bitcoin. And then, as Bitcoin appreciates, we naturally de-lever our balance sheet. So I think that's a really unique capability that Bitcoin treasuries have access to that other companies don't. I think that you'll see over time that you can build a treasury that will become the preferred counterparty to a lot of the financial companies out there. So if you think about who do you want to face as a finance company or as a bank, if you need a Bitcoin revolver, we want to make sure that BSTR is the counterparty of choice.
You have like 30 seconds left here, but this was the first press release I've ever read with the word OG in it, right? You said that the commitments that have come in were from longtime Bitcoin OGs. Who are they?
Adam Back is probably the OG of the OGs. He is the person that Satoshi reached out to when he wanted to cite Adam's work for the hash cash. As you guys know, the proof of work algorithms that secure the Bitcoin blockchain. So we have kind of the original patient zero of the Bitcoin ecosystem. So we're very excited about what we're building. We think that we got kind of unique access to OGs in the space, and we can unlock Bitcoin that's not currently on exchanges at in very large quantities.
Sean, come back. That's Sean Bill, Chief Investment Officer at Bitcoin Standard Treasury Company. Certainly the trade of the day. We are seeing a lot of these hit the public market. That does it for us for Bloomberg Crypto today. Join us same time next week, but we have Tether CEO tomorrow with us at noon. Looking forward to that. We'll talk about stablecoins and all the competition in it. This is Bloomberg.